As we turn our attention to the grain markets, we were joined this week by Todd Hultman of DTN. As the month has progressed, the same storyline has remained. Volatility continues in the grain markets. Big questions certainly remain as Russia's war on Ukraine continues. Back here domestically, concerns of drought are impacting the trade. We began the conversation with Todd on Wednesday by looking back to the last time he was on Market Journal, which was just at the start of 2022. We're joined now by Todd Hultman. He is the lead analyst with DTN. Todd, it's always great to have you on Market Journal. Thanks for coming back to the program.
Thank you, Bryce. My pleasure.
Well, the last time we talked, it was in January. We were talking about $6 corn. The world has changed since then, that is for sure. The situation in Ukraine has obviously dominated the markets over the past couple of months now. Give us your take of where we sit with these markets at this point.
Yeah, well, needless to say, this is just crazy. We've got corn over $7 now. Back when I was talking to you, $6 looked like a very handsome price. The whole situation with Ukraine has really ramped things up, and it's added a lot of danger and potential volatility to the market, as well as real volatility. We've seen some very big price swings in grain and energy prices throughout this. Obviously, Ukraine is a very important exporter to the world of corn, wheat, barley, sunflower oil. It has a lot of major crops that the world counts on. And, the threat of not having that production available to the world this year adds a lot of fear to the market. And of course, just the potential threat that this problem could get even worse adds even more fear to the market. So it's given us a very dangerous situation with prices lately.
As you look to the short term of this situation, Todd, do you think we'll just continue to see this volatile trade in all the major grain markets here until we find some sort of resolution to this conflict?
Yeah, I have to say, Bryce, as long as the Russian threat is active, it will continue to paralyze the market, and it really disrupts things in an awful way. It tends to scare the short side or potential sellers in the market, and that makes it difficult to price things accurately. We've seen a lot of commercial entities changing their cash bids, going from May contracts to July, sometimes to September, simply because they couldn't keep up with the big increases that were showing in the futures board on May. It's disrupted the entire cash grain market as well as the futures pricing board.
So, of course, we have that situation in Ukraine, which it seems like the markets are obviously closely following. But are there other factors playing into this market right now that producers should be aware of?
Well, of course, we've had serious drought in Brazil. We had a much smaller soybean crop in Brazil this year than anyone expected. That drought has also spillover effects to Argentina, where they're a major exporter of soybean meal and bean oil. So we've seen a very strong demand market this year, and demand's really picked up for U.S. products recently, but not only for corn, but also the soy products. And those higher crush values that we're seeing in soybeans is really giving strong support to our U.S. soybean price this year.
Back here domestically, it seems like the drought conversation as we're gearing up for corn and soybean planting is rearing its head. Obviously, that has to be a concern, though, when we talk about the wheat market as well. How closely are you following that drought conversation domestically?
Yeah, domestically, it is a big concern in the southwestern plains. Now, early this week, we did have a nice little storm move through here, about 2 days worth of rain and snow mix, and it looked like it really gave crops in Kansas and Oklahoma some decent benefit. But it's not a drought buster by any means, and there's still a big part of the region that really could use more moisture. So that remains a very important situation as we get closer to spring and early summer.
Todd, on a recent article posted at DTN's website, you talked about some of the challenges there are out there when trying to price new crop. Break down just a few of those challenges you see for those producers trying to figure out when's the right time to sell some new crop.
Yeah, well, I have to point out, and the reason I wrote the article, Bryce, is because this year, unlike other years, with the situation in Ukraine and the Russian threat, it's very dangerous actually to put on new crop prices early this year. And anyone that does so, you better be prepared for the possibility of really having to put up a lot of cash for margin, even to keep those hedge contracts. We simply don't know what President Putin might do. I would say that he's not acting as if he was a reasonable fellow. And he certainly threatened to ratchet up the situation in Ukraine and make things even worse. It doesn't take a lot to scare our grain and energy prices, or any market prices for that matter. And so I'm very concerned about putting on short positions even when they're hedged this year. You really have to make sure you're going to have margin available. And if you don't, you better look at some call options to limit your cash outlay.
Todd, when it comes to these markets, is there anything in particular we haven't talked about yet that producers should be mindful of?
Well, one of the positive aspects of this year, Bryce, is that the crop insurance levels are high. So if they did get in on good coverage, and hopefully they got 85% or more on their federal crop insurance protection levels, then they're going to be in pretty good shape, and they ought to be pretty well protected in what could be a very volatile and dangerous year ahead. If you don't have the crop insurance, it's going to be a very risky year indeed of what comes up ahead, and your best bet now may be to look at some put options on the board, but I will warn you, everything's quite expensive this year given the price volatility that we've seen.